in your speech, in your prepared remarks, you say Japan can go ahead, BOJ, meet the 2% inflation target. Does more need to be done now to do that, to maintain price momentum, hit that 2%?
Okay. First of all, I think that we made it clear that first of all that we still maintain the momentum, but if there is sort of potential danger to maintain that the momentum, we would act accordingly, appropriately, and in that sense, that we are going towards sort of a more accommodative stance than we have now, if that happens. So that much is clear. So, and speaking about sort of the current situation more broadly, the trade issue is really hitting all economies. Japan is no exception. And you may actually argue that that trade issue at some point in time may not affect Japan in a bad manner, because lots of things can happen when that trade tension emerges. So, but overall, I think the picture is the one of sort of risks, downturns, downside risks, and uncertainties. So that we are quite aware that we should deal with this situation. And by the way, this trade tension is probably the part of the larger picture of the U.S.-China, not conflict, but more like a competition, rivalry. Okay, so that the intellectual property rights and all sorts of the rule maintaining are the part of the larger picture. The trade tension is just a manifestation of this large trend. So, having said that, so that means we have to expect that this will go on for quite some time. So that in that sense, that we have seen dark clouds, and dark clouds are gathering their momentum. So the question for us is that dark clouds is really threatening our momentum to maintain to reach a 2% target. So we are kind of debating, and we are assessing that data quite closely. And I cannot really tell that's our conclusion, because that we are still So,
right. Yeah. I also want to ask you about, because in your prepared remarks you mentioned that QQE, quantitative and qualitative easing, was a big factor lifting Japan out of the long period, from the late 1990s through early 2010. And one of the big innovations, among many, that the Bank of Japan has done was negative rates, 2016.
Yeah, exactly. Yeah,
right?
Yeah.
So obviously then part of achieving those goals as you look at those charts. So what is your view of how they fit into this picture of, hurting, helping? Some people have been critical. Some people think they have definitely been effective. The world's talking about negative rates now.
Yeah,
ECB,
exactly.
maybe even in the U.S. Have they worked, and would you be in favor of using them again?
Well, I mean, that's we are keeping it now. So that means that you believe that is an accommodative measure. So that we believe negative interest rate policy is effective, and it has been helping. So I have just touched upon the QQE because I didn't have time to talk about the other aspects of the current policy framework of the BOJ. But after that, we have introduced negative interest rate policy back in January 2016, and we have also introduced yield curve controls. Sorry about the technical jargon if you are not familiar with that. In September 2016, and I believe that's the whole package to sustain the sort of the momentum for price stability goal, to reach the price stability goal, and to that's the sustained economic growth. And I believe, and we believe at the BOJ, that the good signs are showing up in that's in the chart we show. So that in that sense, that our policy has been working and has been effective. Now, as for the next move, from now on. That's that much is clear. Many people, we are aware that there are some people who are not happy with the negative interest rate policy. But that policy, we believe that it's been working, and we have introduced some sort of measures to cushion the sort of the negative impact of the particular policy, negative interest rate policy. And I think that is working. So that if we go further, we can obviously think about reconsider those sort of cushions, the measures to mitigate sort of the so-called negative effects. So that in that sense, that we still have options, and we would do, those options. We would use those options if it's necessary.
And just to clarify, it's something you'd be in favor of. You think that would be effective to make negative rates more negative?
Well, that's if you're asking my personal opinion, that I cannot disclose my personal preference. I mean that's now the negative interest rate policy is a part of the package, so that you should think about the whole package, not the piece of that the package. So in a sense that it's working, that I am in favor of it. But if you say that negative interest rate, is there any other sort of options available other than negative interest rate policy? That's the conclusion we have is we have the negative interest rate policy because it has worked and it's still working. So we cannot really answer that. Can we do, that in a hypothetical world, do a better sort of policy measure or something? But I think that this much is really true and clear. We don't want to continue low interest rate or negative interest rate policy for longer term. Okay. The circumstances, that's kind of, that's require the BOJ to pursue this package. Okay, but in the ideal world, we'd like to, reach a 2% inflation target, and we'd like to get out of this negative interest rate policy as soon as we can. Now, of course, that doesn't mean we are rushing to the exit. Okay, but this much is clear because we don't want to maintain low for longer to become low for forever policy. That's a kind of consensus we been shared. It's consensus shared by other central bankers all over the world.
Let's open up the audience now. And remember, keep your questions short and identify yourself and wait for the mic to reach you. Let's start with somebody on the aisle to get to a question quickly, and then we'll come back to you, sir. Who's on the aisle who had his hand up? That's you, I believe, sir. And then woman, or let's start with you and go to you and then to you.
Sure. Hi. My name is Mark Zashin, and the question I have for you is that, hypothetically, based on your personal opinion, let's say Japan experiences some financial crisis. What tools does the Bank of Japan have to deal with that, assuming that you have negative rates? And do you have to pay attention to what the fiscal policies are?
Should I answer the question, or should we?
Well, let's just maybe go question by question. Just kind of go quickly around. Yeah.
Okay. Now you ask me a kind of precarious question. I mean, we cannot really talk about the financial crisis, but hypothetically speaking, but of course that's the major one of the major functions of having a central bank is to be prepared for the financial crisis, obviously. So we have a bunch of sort of tools to deal with that. So we can inject, for example, liquidity. And now, of course, besides that, we have sort of macro-prudential policies, which have been sort of shared by the Financial Services Agency in Japan and the Bank of Japan. And we have a monitoring system And of course, we have sort of monetary policy. If that's financial crisis turns to become economic crisis, we so we don't hesitate to utilize our monetary policy tools, and obviously tools we can of course discuss the effectiveness, shortcomings, the merits and demerits of each and particular policy. But that's as I said, we have options, so that we can utilize these options. Now, of course, we don't disclose which, because it really depends on the situation. Okay, what kind of crisis, financial or economic, we are going to have. Now, about the fiscal policy, that's we don't really talk about the fiscal policy because that's not our jurisdiction. Yeah, but generally speaking, now of course that's whenever a crisis hits, what we need is kind of policy coordination. That much is clear. I think that's a kind of universal truth. So that fiscal policy authorities and the monetary policy authorities should cooperate to tackle the crisis situation. So that's obvious.
Okay. And the lady next to you.
Hi, Linda Zhang from Purview Investments. I have a question for negative interest rate. Recently, ECB has cut interest rate from negative to more negative, and they're going to start a new fresh round of QE in November. So they essentially have out Japan.
They have already out Japan.
Yes, the 10-year rate is already much lower than Japan's.
Okay.
So what advice would you have for ECB and German Chancellor? Thank you.
Oh, wow, okay. Well, I'm not in a position to advise German Chancellor or the ECB, but generally speaking, I think that it's very presumptuous to advise them because we're kind of learning from each other. I think the ECB and the Fed here and all other central banks have learned very important lesson, I believe, from Japan. We are now, we are now talking about Japanification, Japanization once again, in a sort of, it's rather unfortunate circumstances. But I would say, that now this goes back to my talk about, I think I haven't talked about sort of the whatever happened in last decade or what initiated last 2 decades. I think that the quick action is very essential. So when you have that's when you expect something bad to happen, it's rather good to act sooner rather than later. And also policy coordination is extremely important, not only with fiscal authorities, but with macroprudential authorities. So you should have a sort of a whole sort of team of authorities to tackle crisis situation. And speaking of that, you should need a sort of public understanding and the backing. Okay, so you should need a sort of a public understand that this crisis may turn out very bad, from bad to worse. So that's hypothetically speaking. What I would say is that that you should have a sort of good understanding about the danger of one country or one jurisdiction could easily go into a deflation period, and that deflation would stifle the people's the vitality, and that could have a sort of longer lasting effect on the economy. So you should act sooner rather than later.